wasn't planning on doing a video right after the one I put out yesterday, but I've spent the weekend digesting a lot of industry news. I'll get into it more in this video, but ultimately, I've decided to sell a few industrial real estate investments based on some of these recent developments. Now, to be fair, there are always reasons to be afraid of what's happening in the market. If you ever want to be depressed about the economy, just head over to the Epic Economist channel, where he's been predicting an outright economic collapse for the past 4 years.
Many economic indicators are signaling that the U.S. is marching towards another recession.
Now, I'm nowhere near as bearish as that guy is, but I also recognize there are some major headwinds at play. Instead of talking about the economy or the stock market, though, instead I'm going to address a few industrial real estate stocks I've talked about before. Those stocks are Prologis, Stag Industrial, and Duke Realty, all of which are real estate investment trusts focused exclusively on industrial real estate. And at some point today, I'm selling all three of them. I'm not a stock advisor, so don't take direction from me on this, as I'll be the first to acknowledge I could be way off on all of it. I'm also not selling any of the physical industrial real estate holdings I own, as I'm still very bullish on the long-term outlook of these assets. But in the short to medium term, there are simply too many factors to ignore. First, these stock prices are up considerably since when I first started buying them in mid-2020. There was clearly a lot of optimism being priced into these stocks about how tight the supply of industrial inventory is versus the seemingly insatiable amount of demand. I'm far from being an expert on forecasting, but it seems reasonable that this crazy growth can't be sustainable forever. And in fact, Amazon just reported last week that their online sales growth has stalled. It actually went down 3% for the quarter, yet their expenses are still rising. It could be seasonable, or there could be any amount of reasons why it's slowed, but I think this slowing growth will be experienced by other companies as well. This leads to the next point, and that's the various pressures on the economy as a whole. For one, interest rates are rising, and they're rising because the feds are intentionally trying to slow things down. Then we have the war in Ukraine, work stoppages in China, and the bond curve temporarily inverting. I'm not going to predict a recession, but it doesn't seem unreasonable to at least have that on our radar. If the economy as a whole slows down, then so too will consumer spending, and by extension, the demand for warehouse space. Next, the wild industrial real estate market has brought much more competition, as we would expect. A company like Prologis has long dominated the warehouse landscape, but there are plenty of competitors looking to take away some of that market share. This last point is based more on my own personal thoughts, so you should be the most skeptical of this point. But I believe these companies are focused on areas with growth challenges, such as major port cities. I believe the supply chain network is going to experience considerable changes in the near future, as the merger between CP Rail and Kansas City Southern will disrupt the flow of freight. Instead of going east to west, I believe the flow of commercial freight will transition to going north to south, making port cities in southern US and Mexico that much more important in the North American economy. I did a longer video explaining this if you want to hear more about it. I'll put a link up here. To emphasize all this a little bit more, there was a comment in The Real Deal which stated the following: Amazon officially has too much industrial space. A hangover from spending billions from 2020 to 2022 to double its fulfillment and distribution space. They went on to quote their CEO following their earnings report this past Thursday: Amazon is no longer chasing physical or staffing capacity. Ultimately, I feel there's still a lot of room to grow in the industrial market, but I think there's been way too much growth priced into these stocks. Again, I could be selling way too early, but based on the pressures I mentioned earlier, combined with the fact that I've made excellent returns on them, is ultimately why I'm selling them. These stocks could very easily continue to rise, but I'm moving these positions into cash so I can have some dry powder on the sidelines. I have no plans to divest any of my active real estate holdings, and I still firmly believe in the long-term prospects of the market. I'm still an active buyer, and I'll still be looking for good opportunities myself. While I'm unabashedly a huge fan of industrial real estate, I don't think I'm being fully transparent if I only talk about the positives. Instead, I'm going to bring up both the good and the bad, and then I'll give you my own thoughts on it, and you can also let me know what you think about it as well. And a quick announcement as well. I'm launching a newsletter where I'll be personally curating a bunch of important industrial real estate news to help you stay ahead of the competition. I'll leave a link below so that you can subscribe, and if you're not getting any value from it, you can unsubscribe at any time. It's totally free, and I really do think that you'll get some value from it. Keeping a finger on the pulse of the market will be important, as one thing is for sure: 2022 is going to be another wild year. I'm still keeping my factory sealed Prologis Monopoly game as well.